SmallCapPower, we're pleased to welcome Benj Gallander, the president of Contra, the Herd Investment Newsletter. Thank you for being with us, Benj.
Oh, it's great to be here. Thanks for having me on.
Yeah, so before we get started, let's talk about how long you've been in the industry and what your track record is like.
Well, I've been investing for about 40 years, which is kind of hard to believe, We've been doing the investment letter for almost 25 years. Our 15-year annualized return is 19%. Our 5-year annualized return is 26.9%. So amongst the best returns out there, we're very proud of it. But certainly we don't make money every year and we don't do well every year. But overall, it's worked out very well for our subscribers.
Now, who are your subscribers? What's your demographic like?
Well, we're different in terms of we only take 1,000 people. So one of our subscribers is a billionaire, and he's very well known in Canada. And his secretary said to me, "Why do you only take 1,000? It doesn't make sense." But Ben Stadman and myself decided we could service people better, we could make a good living that way. People pay $680 a year. So we have some huge money managers, stockbrokers. We also have John and Jane Doe out there. When you're paying $680 a year, you want to have a portfolio of a certain size because effectively you can look at that as an MER. So it's not worth doing it if you've only got a portfolio of $5,000.
Now, for the fact that you've been doing this for 40 years, your investment approach, I'm sure, has evolved quite a bit. What is it now?
Well, it certainly has changed over the years. I've always been kind of contrarian. I grew up with 3 older sisters, and they would probably say that I've always looked at things somewhat differently. I was always looking at companies that were beaten up. For example, one of my first investments was in Inco. So huge mining companies, but the workers were on strike. And I just thought, well, when they go back to work, the company should recover. At that point, I didn't look carefully at things like income statements, balance sheet, financial ratios. At that point, I wasn't just calling up management and saying, "Hi, I'm Benj Gallander, talk to me," which now, fortunately, a lot of them will do. We do a lot more in-depth research than we used to, but at the same time, some of what we do is still rather simple. And I'll give you an example. When we bought into KLM Airlines, which was after 9/11, airlines had been killed. So I basically thought, well, airlines are going to come back because at some point, people in the so-called developing worlds like China and India, they're going to become richer and they're going to want to fly. And KLM had amongst the best, if not the best, financials. And I thought, they're going to come back. The stock was trading at $8. I knew for years it had traded over $30. I just had to sit and wait for it to come back. And eventually it did, and we sold over $30.
So that's a win. Well, are there any stock picks that you have at this time?
Well, in the portfolio I manage, there's 21 stocks. We divide them into buys and holds. We have 2 portfolios, one that I manage called the President's Portfolio, one that Ben Stadman and Phil McKellar manage called the Vice President's Portfolio. Some of the picks right now are Quarter Hill, the former Wyland. I like Obsidian, which also changed its name from Penn West. An interesting play, it's a Canadian company in the US, Alpha Pro Tech. They do building supplies, it's roof membranes, but they also do protective clothing. So when you have things like SARS and H1N1, people who want to get face masks and body coverings, body gowns, and things like that, the stock spikes. And the last time it spiked, it went from about $3 to over $10. So I wish I had sold it all, but it was a mistake. I only sold about 75% of it. So I'm holding about 25%, and it's gone down to $2 and change again. So I think that has potential.
Well, yeah, I mean, these stories that you're telling us right now, where do you find them, and what sorts of resources are you using yourself?
Now we write a column called the Contra Guys for the Globe and Mail. I use the Globe Investor Gold filter. I throw in companies that are down at least 33% in price over the past 52 weeks that have revenues. I always like revenues that trade at least a quarter. Almost every company I buy is under $10 in price, but By using these filters, I can do things incredibly quickly. Then I look that they've been around for at least 10 years because I want a track record. Then I get into all the financial ratios, etc. Once I find a company, I don't buy in for at least 6 months. I want to understand the company better. Often, I don't buy in for 3, 4, 5 years. And we're very, very patient investors. Last we looked, our average hold time was 3.5 years, but we're only looking for home runs and grand slams. So we only look at companies for the portfolio I manage. It can go up at least 100%, often 2, 3, 400%, but none of that is pie in the sky. The companies have always traded at those levels before. So by being patient, we've done well, but as you know, I'm often on BNN, I'm on CBC, and one of the people who interviewed me regularly on BNN said, how can you be so patient? Over time, I become more and more patient, and that's hard for people to do because there's so much noise out there. Things move way more quickly because of the internet, because of cell phones, because of technology. And I can sit back, be patient, it's who I am. Yeah, I've made many mistakes over the years. I sometimes listen to people and say, they don't talk about mistakes. I've been criticized because on BNN they say I talk too much about my mistakes. Fortunately, the track record, proves it helps. And you learn by them. One thing I do now is I avoid debt more. I'm more debt averse than I used to be. It's very hard for a company to go bankrupt without any debt or with nominal debt. I did have one go bankrupt with no debt, but it's the only one in my history.
40 years, yeah.
So that's been key. I try and understand industries better. In terms of sectoral analysis, I love sectors out of favor, but I think the debt's been one of the major things. And the other thing too is management. I used to be willing to invest with people who I thought might not be completely on the level, maybe a bit unscrupulous, and I thought they'll leave enough money on the table for me. Now, if I have questions about management,
Just stay away from him?
I stay away altogether, and that's just me, and then there's a whole other comfort level.
Well, Benj, thank you so much for your insight today.
It's been an absolute pleasure to be here with you. Thank you.